Good morning, everyone. It's Curly K here, and we are about to get into the free trade idea for the day for Lotto Friday, which is February 6th, 2026. And as you can see here, I'm actually looking at Google. Now, Google had a very aggressive recovery yesterday, and I want to see if it has the potential to get a continuation to the upside or if we're going to take the 4 hour trigger to the downside. So let's go ahead and map this thing out. So very aggressive, as I stated on yesterday, as you can see yesterday's candle. So we do have a bullish to down per the strat. So we have our call entry off of the daily time frame, and we just simply need to figure out what our magnitude is going to be. All right. So we're looking at 341.77 should we decide to push to the upside. And that will be our ATR target. And then let's look at the downside. Now, the strat teaches us to always be prepared in either direction because you may have a bias to the upside. Like for today, obviously, I'm looking at Google to push to the upside and get a continuation. But the strat says, hey, everything is based on participation every day that you wake up in the market. So there's some days where your candlestick may be invalidated. And so you have to prepare yourself for both directions in the event that we do the opposite. That way, you don't have to scrap your trade. You have a plan for either direction. And it's all going to depend on market structure. So if we're pushing up, you want to see higher highs and higher lows. If we're pushing down, you want to see lower highs and lower lows. You want to see some aggressiveness in either direction. So for the downside, we are looking at 320.72. All right, perfect. So let's just talk about what our strike prices should be. So if we're pushing to the upside, I would opt for in the money to 335. So you can opt for any contract that's currently in the money or 335. I wouldn't exceed that particular strike price because it is a 0 day. It's Friday. You want to be in the money as soon as possible. If we do decide to push to the downside, you can opt for a 322.50. And that is where I would actually go with that. So 322.50 to the downside, you'll be stretching it. If you opt for a 320, that would be considered high risk, but it would be something that's potentially attainable as well. So this is your free trade idea of the day. If you like these videos and you want to see them continuously coming in, please remember to like, comment, and subscribe. I hope to see you in baggage claim. Bye.